This is Justin Pulitzer. This is my weekend review video for November 1st, 2015, although it is being filmed on October 31st, 2015. Happy Halloween. I wanted to start off with showing you guys something that I think would interest you. I was recently featured, I guess either by mistake or on purpose, I don't know, in the on The Verge here. There was an article about the new Apple TV and the best apps that are available for it, and if you scroll down to the Periscope section, look who's here. Me. So what's incredible about this, and I really want to thank everybody who follows me and who's stuck with me for so long, if you take a look at this, this means that I was the #2 video, not in the US, but in the entire world, the top global videos. That's absolutely incredible. I love how social media has really been available to let me get my message out there and to bring my commentary on the markets to everybody. Anyhow, I will post a link to this article in the description of the video if anyone cares to read it, although you could probably just pause it and just read the little blurb there. But anyhow, thank you so much for making me, I guess, the #2 video in the entire globe. Absolutely amazing. If you're not following me on Twitter or Periscope, the handle is @JustinPulitzer. And please be sure to subscribe to this channel. You'll get notifications when new videos are posted. Anyhow, let's get into the real crux of the videos here. So let's start off with the VIX. I've been talking about the 6 keys to the market. Let me just rattle those off to you really quickly. That's the VIX, the UUP, the dollar, the bonds, the TLT, USO, which is oil, FXI, which is China, and then, of course, IBB, which has become so important in the biotech. Anyhow, with the VIX, you know we had this super spike. We are now back well into the middle of the, the kind of consolidation range. And I'm sort of a little bit concerned that we might see a pop in the VIX, maybe to the downtrend line, the 50 MA, which is up around, believe it or not, close to 22. So maybe there'll be some type of a pullback. However, it's really going to matter, I believe, this day here, this day's range. You could see we had this big hammer. So the 1280, I guess if that gives, we'll probably see the low of the 11s. If we take out the high of day there, which is 1573, then I think we're going to rally up to 17s, maybe 20, and maybe even to 22. We'll have to see. This is really where the big bodies were in 22, sort of where the real breakdown in the VIX took place, so maybe it wants to have a little bit of a check back up to there. And you'll see why this day is important. This was the Fed day, and I'm going to talk about that in a little while when we get to SPY, but just keep that in mind. So VIX is sort of toward the lower end of range. We're in a little bit of caution mode. UUP has been kind of a little bit of a tease here. You can see it broke out on the Fed day. It then subsequently has fallen back below the trend line, although not really convincingly. We're here with a hammer, and we're still sort of above the breakout, which is a little bit concerning to me, because if the dollar rises, that hurts PE multiples. It also hurts the quality and the total amount of earnings that companies that do business overseas make. Again, the VIX, again, the UUP, this is the Fed day range. We're going to use the high and the low of that day as the gauge. So anything above there gets bullish, anything below there gets more bearish. So it's kind of, I wouldn't say it's showing its hand just yet, but it has me a little bit nervous, because if this regains the strength, it's a problem. TLT, I believe this was a little bit of sell the news. You can see it had been strong, and then it kind of just sold off. It's roughly midway in the range. You can see the 100% retracement here. This is about 50%. And we're kind of getting near the channel low. So we'll have to see how this plays out. It is in a little bit of a downtrend within the context of a potential new up channel. So this is going to be real key next week. If we start we are below the Fed day, which is a little bit more bearish, but in the context of this channel in the range. TLT, as you know, if it's strong, it's good for equities. If it's weak, it's not. There's an inverse relationship between price and equities. I've often discussed the discounted cash flow model, and if this is weak, the amount that you divide earnings by goes up, and that makes a lower end product. If it goes down, meaning yields go down but the price goes up in bonds, it's a lower divisor, which is good for stocks. Sorry if I'm a little too wonky on that, but just know that higher bond prices, good for stocks, lower bond prices, bad for stocks. Oil is really key here. I've said I think it's bottoming, although I thought it was going to be a really messy bottoming process. The USO has been iffy. It's been selling off. We're below we got below the consolidation range, and now we're getting like back into the middle of there. You really need to see it take out this 16.15 for it to get its mojo back. But I as long as it's not falling apart, that's good. There were some good earnings from Exxon this week. You can see it's struggling right around this gap fill, the 83s, although it's a little bit overbought, you can see stochastically, but what I did like, the close was a little bit iffy. It didn't close above 83, but it kind of looked above and kind of closed back into the sort of the upper part of this consolidation. But you can see how many times we've been banging on this, and if you keep banging on it enough, we could rise up and maybe get to the 86. 86 is another really key level. Up here you can see that was sort of this consolidation where this sort of started to break down. But Exxon is sort of in a bit of a channel. It could have a spike up to the upper part of it. It could also roll back over down to the lower part of it in the 78s and maybe even retest into the breakout area of the 76s. On a move back down, I would be a buyer. I also think if you want to play this with call spreads, it's okay. I think that eventually this will resolve higher, but I don't know that it doesn't need to kind of check back a little bit lower. Same kind of thing for Chevron. I don't really want to get too into that. FXI, I've discussed that I was the only one who was a little bit bullish here, and I said I thought we could get up close to between 40 and 41. We did exactly that. It got a little bit above the channel, and now we're kind of peeling back. The key, and you can see the stochastics are rolling over a little bit. China has been a bit of a leading indicator for us, so we'll have to be a little bit cautious. The breakout was 37.66. We'll have to see how that holds. It's also possible that it wants to retest a little bit lower to 37, which is the 50-day moving average. And I took the liberty of drawing a Fibonacci retracement. One, I want to show you when something is weak, it often checks back to the 38.2. That's where we check back to, coming back down. Now we could potentially see the channel low, which roughly coincides with the 61.8, which is down in 35s, 36s. I would be an interested buyer down here or a put seller near dated for right or right out, particularly if this comes down in a steep way and it'll kind of come down from the top, so to speak. I'm looking to be a buyer down there. Some of the Chinese stocks, start off with BABA. This has run up a real lot. We have broken both downtrend lines, which is good. The bad news is look where we came into. We kind of came into a bit of getting close to this reference high. We got the gap fill. We're coming into where the big meat of the volume distribution is, where the dead body is, look where the old kind of support was up here. We tested on either side of it here, broke a little bit, but got back above. And then when it broke definitively, it was a problem. We're getting back up there. This is a little bit stretched. Although I will say now that we broke the downtrend, you probably can play by the dips. Still bullish. The fact that we're over the earnings gap high of day is good. Anything above, let's just say 82.79 could still put in higher. If it fails and we get back, I would think we get at least midway back into this bar to the 200-day moving average. But if you're long, I think you could use this pullback low here of 80.82 as a stop. Anything below there to me is going to get real iffy, and we could maybe fill the gap. Also, BIDU, I had said in last weekend's video that I thought that this was bullish and that I thought we were going to try and fill up some of these gaps and maybe get to the downtrend line. Wow, it happened pretty dramatically. We had the gap, the hold, and then look at this, a gap again, right into 200-day moving average resistance. So I do think it's possible there's a little bit of a move higher. maybe to the downtrend, maybe to this 61.8 Fibonacci retracement of the move. And look where this old reference low was. I would be starting to look to take some profits here, though. It's come up a lot, also come up. This one hasn't come down from the bottom. It's come up from the bottom. So that just means it's come up in a straight fashion. There wasn't really that much consolidation. It did have a little bit here, but I do think that there's going to be some reference sellers. Maybe you get a squeeze and it punches through to fill the gap here. I actually, if you want to play this and you still want to play for continuation higher, I like call ratios with the 2-time, like long one here, short 2 times up here. So if you want to do that, the like 206 would be kind of the 206 to maybe 210 would be the ending strike. I don't think we're just going to knife right through that, but if you want to buy some down here and sell, or some in here and then sell up here, you can get that on for a credit. I like that, but I do think that this could potentially run into some resistance. Anyhow, that's my story. Could have a little bit of rough sledding there with the Chinese stocks. The IBB has been in a downtrend for a while. You can see I had thought we were going to get maybe up to here. We didn't even get that strong. We kind of were getting close to that gap fill, which would have coincided perfectly with the downtrend. We didn't quite get there. That shows you just how weak this has been. If this rolls over, the key level to hold, you have some support here in the 321s, but really these bodies here are roughly around the 50% fib where this took off from. This would be kind of like a check back to the breakout. So I do believe there'll be some support that'll come in around 315s, 360, really 316, maybe with some slippage down to the 61.8 to 311. I don't know that we're going to traverse all the way down. Maybe this is trying to get its sea legs, but I do think down here it could set up, you could buy some put ratios, like buy some up here and then sell 2 times out of the money here for a little bit of a continuation for a pullback. That to me would work out well. If you want to do some call ratios, maybe buy here and then sell some up, near sort of the higher end of these bars where there was some resistance, maybe up around the 200 MA. So that's IBB. I'm really pissed off. I wanted to play Gilead long for earnings, but this AbbVie came out with their hepatitis C news, which was bearish for them, but of course bullish for Gilead. And you got the move here, and that's why it was kind of lame on earnings, a lame duck. It just, it had already had the move. That was very disappointing to me because I really wanted to play this long. Again, their numbers were good. Gilead, I think, is still the best. There is some more room, I guess, up here to the 213s. I was sort of like, look where the real breakdown took place. You can see once we got through there, it was just free fall. And then look where the check back was up to here, which was the 113. So I think it's possible we could get back up there. It's also the downtrend. I would like that as a nice right or right out short for just some rollback, maybe just as a day trade. If it breaks through there, I'd be careful. We could fill up the triangle easily to 123. So this would be like a row setup. That just means right or right out. And if it breaks, maybe do some call spreads or some call ratios. This is nice that it consolidated, so it isn't that extended. The ideal would be, if you're bullish, the ideal would be to come up here, muddle around underneath here for a little bit, and then knife through. But this could set up for a nice day trade intraday. One of the real problems for the market has been this Valiant. Wow, look at this thing. Head and shoulders, breakdown. This is like leg 1, leg 2, and now you're on leg 3. If this isn't like a fraud, like the Citron guys say, this really should be it. Because, when you have a 3 leg, this is leg 1, leg 2, leg 3, really should be the end of it. There's going to be some, they're doing another presentation on Monday. So I think we're going to know, like if this is down big on Monday, again, like if it snaps here and it gets like cut in half again, I mean, who knows with these things, with these types of scams. I don't even know that it is a scam. I just know that the price action of the stock is pretty bearish. You had the bounce, you're back down to these lows. If these lows hold, I do think that, this is primary trend. It's no coincidence where this held. The play could be back to the upside, maybe dramatically back up to this area to retest that leg. If it is a snap to the downside, I mean, there could be free fall. I mean, you could come down to, that target area that they're talking about, these Citron guys in the 60s and 50s. I mean, it is possible. I tend to like to avoid these kind of train wrecks. I don't have an edge on this, and I don't have an edge on the news flow. But I did think that this was a buy for a bounce. You got it. It's back down here. We'll see. It's back down here pretty quickly, so it's kind of do or die time. A snapperooski here could get pretty ugly. On the contrary, if you bounce back up, it could be good. I do believe that there could be a tradable low in on if there is another move down like early Monday. So let's see how that goes. The big problem for me with this is that this could be like some kind of a black swan. Other funds are involved in this, and if they start liquidating their stocks, it could have a dragging effect on the entire market. Not surprisingly, Herbalife has been rallying as Valiant has been going down. I think that other funds are predatory. They may smell some blood in the water with Ackman, and this could have some legs. He could be getting squeezed on both the short side, his short position, and then also smacked on his long position in Valiant. I would think that the move is probably going to continue up in Herbalife. That's just just kind of how the market works. It's a dog-eat-dog type of a world. Let's get back to SPY. Wow, let me get us into modern times. So we held here. I had talked about there being a pullback that I thought we would hold here, and man, if we rallied strongly. I had said that into here would be some resistance. The 4s, you can see there was some responsive selling. The 5s, and then we kind of gapped and went. This was on Fed minutes, which were considered dovish. Then we rallied. There was a little bit of pullback. I had said this was on some weakening, that these pullbacks have all been on kind of not such bad breath. We rallied up pretty strong here the Fed day. And the last couple of days, we've just been consolidating. This was not as bearish. On Friday, this was a little bit slow until the end. But if you look here, look what happened. You had rallied up into some resistance, pulled back to kind of retest the breakout range, which was here. You can see this was I think, the mild days of the pullback, actually. I'm sorry, it wasn't up here. It was up here. People were shorting. They thought this was sort of the end because we got up into some reference areas. And these declines, I think, were on positive breath, as crazy as that sounds. Wham, we went up again, and now we're kind of just retesting this breakout. You can see back in the day, I said this 207.84. If we were below there, it's a little cautionary. We are back over the old channel, which is, I guess, good for the bulls. Problem is look, we've gotten really overbought here stochastically. I don't know that we're not going to pull back. I believe the expected move in SPY for the next week is about $3 and change. So I've been saying that if we got above 210s, 205s, which we did. I thought we could maybe go to 210s. We got close. We got to 209.44. I'm sure my troll haters on the stream are going to be like, "Oh, what a dope. We didn't get exactly there if we come back down." But it's possible. Look where we closed here. We got 207. So there could be a move back up to 210s, back into here. I believe on the monthly, the November, the expected move is $6, so that would take us back up to the old-time highs by the end of the month, if possible. However, we are like sort of the top of a potential channel. I kind of just drew it in from these lows and then just used these as the connector for the highs. So it's possible we just chop sideways. You can work off overbought conditions by chopping sideways, or we could potentially come back down, retest the backside of the old downtrend line here, also the channel, and this would be kind of the low end of the range and halfway through of this bar. All right, so how do we know which scenario is going to take place? The unfortunate side of this coin here is that we don't. So what I like to do, and I've said this many times, and a couple of people have picked up on this recently, I've heard it mentioned, is that we use the Fed day range. And anything above 208.98 is bullish, particularly if we were to come back up again after these 2 days of consolidation. I think we would be off to the races. However, if we get below the low, which is this 206.21, then I think we're coming back down, maybe in more dramatic fashion. So I like to use the Fed day range, not so much even to trade it or to trade inside of it, but to trade on the other sides of it. If we get above it, it's bullish. If we get below it, it's more bearish. Just remember that. But it might not be in such dramatic fashion. I think what happened here is that a lot of people have now blown, a lot of people have lost a lot of money, and, funds are going to have to chase for performance into the end of the year. So I hate to say that the coast is clear, because it's really not. If this does snap here, we could come back pretty dramatically into range, maybe even take back half of the move and go to the 50-day MA and really the low end of the range, the 197s. That would be something else, right? If we came back down here, that's sort of like where where this was, these 199s, I mean like 200s to 197s. That is possible to have a big move like that. But I will say that a couple of things that I think are good for the bulls is that we're back up above the 200-day moving average. It's held here twice. The 100-day is sort of starting to flatten out. The 20 is clearly rising, and the 50 is even starting to flatten out and to begin to kind of perk back up. We are a bit extended from the moving averages, so a little bit of consolidation and correction wouldn't be the worst thing for the market, as opposed to if we came up, in a straight line back to the old highs. I think that would be an amazing right or right out type of a short setup. So I don't want to speak out of two sides of my mouth here, but I was more bullish on this run. I think I conveyed that really well. As we're getting closer to the 210s, I'm getting more cautious just because of the risk-reward setup. The reward versus the risk gets less as price goes higher. If we were to pull back here, then maybe I'd start getting a little bit more bullish again. I think anything midway here, like to the 204s, would be a healthy pullback. I mean, to reach, as long as we're above the downtrend, I think it would be considered a bit of a healthy pullback. That will not be the case in the media. They will be going crazy and talking about the top again. And I think the economic data is crappy. We had a GDP number again. First quarter was 0.6, revised up from negative. Everyone got so excited, and everyone thought we were raising rates after that second quarter of 3.9, which was, I think, a lot of business that wasn't done in the first that was pulled into the second. But look at this. We only were at 1.5 in the third quarter, and that was even below estimates of 1.6. Coincidence or not, I often talk about numbers being cooked in China. You add up 1.6, 3.9, and 1.5, and you average it, that's 2% growth, folks. That is really stall speed weak. I don't know what the Fed is going to be talking about, about how they would justify raising interest rates. There's a tremendous global shock risk. They did, I will say this in the minutes, they did downplay the risk of global economic risk in this last release. However, as I said in the Periscope, it's like they took their dovishness from one hand and put it in the other, and they downgraded the outlook for the jobs economy, the jobs in the economy, basically saying, the Fed's mandate is that they try to do employment and watch inflation. We all know that they have been very far away from meeting their 2% inflation target. I mean, how could they get there if the GDP is first 2%? So they are way out, folks. They, in a recent statement, had said it could be even up to 2018, and I have proposed that they are more likely to do QE than I think raise interest rates. However, this little tough talk came out, and now that the probability of a rate hike in December is now a little bit below 50%. And it had been in the 30s or close to, I think it was like 38, and now it's 47 or 48. I don't really see how Yellen's going to want to be the Grinch and why she would want to raise interest rates. I mean, if they're just jonesing to raise rates, maybe they'll do it. Again, it would be a huge policy mistake. By their own measures, GDP is weak. The jobs market, they downgraded that. I mean, it's going to be hard to say that they're raising rates with the jobs market not doing well, and they're far away from their inflation target. So I just don't understand why they what would be the reason to raise. And we all know we've had very weak seasonal first quarters. I don't think they're raising until March, which would be we get to see both Q4 and also the first quarter. I will say this, though. If the numbers still come in as weak as this, I'm going to start saying after the first quarter, sometime between the first quarter and maybe even the summer, that would be when they would do the QE4. I don't think we'll see it before then unless there is some kind of like major event. Anyway, I didn't want to get too macro on you guys, but that stuff is really, really important. Just close your ears to what the media says. Their spin. They had said... these geniuses had said that this day They had said that the Fed minutes were really hawkish, and I was very adamant that they were not. Don't believe that kind of nonsense, folks. They are just totally misleading you. All right, IWM. So we had a. Let me. This is a little bit nuanced here. You had a false kind of breakout of IWM here this day. This big Mariboso candle. I had mentioned it in Periscope, and now it sort of is failing, and we're back into range. And I had said if this bar failed, I thought we would see the 115s, maybe even 114s to fill the gap. And this is a Fibonacci of that day's bar. We're roughly around the 61.8 of there. So within the next point or so, you're going to really have to start firming up, because if you don't, it's already taking back a lot of this, too much of this rally, and I'm a little bit nervous that this could collapse and cause a lot of pressure on the entire market. There's also a lot of biotech waiting in here. I've discussed this being this could be a sort of a fly in the ointment. If this were to fail, we could potentially fill this gap down to 210s. I'm sorry, to 110s. I actually wouldn't mind put ratios playing that, if you buy some up here and then sell down here. So that's sort of what I'm thinking, but we've got to really keep an eye on this IWM. The complete opposite of IWM is QQQ. Look at this. We're almost at the old highs and just consolidating here. This is absolutely got to be a dagger in the heart for the bears, because now you're doing what I had said, coming up to resistance and kind of just building pressure underneath here, and maybe this does want to punch up. I mean, look what happened the last time. You built these highs here, and then you had this run. And then you kind of consolidated, and then we fell apart. But we're basically back up here again, and we've done it in dramatic fashion on some majorly big earnings. Let's discuss those earnings. By the way, if this were to fall apart, this shelf, I think we fill this gap pretty quickly, potentially even down to these highs here of the 108s. I would like a put ratio if we played that. You can see this was the high here. And this was sort of this was really the breakout of this bar. I think that this area would be a good first target for a reference low if we were to fall out of bed. But let's talk about it here. We had Apple. They were sort of in a bit of a sleeper rally. This was the shake and bake. I had discussed selling puts, and that wound up working. I do think we're in a little bit of a channel situation here. You can see we're coming up into this volume distribution up here, this sort of big top that Apple had. It fell apart, and now it's just sort of, this was almost like a bit of a cup and handle and an inverse head and shoulders, and it kind of is breaking out to the upside. But look where we are into old highs, reference supports that failed, and I believe, and a 200-day just above us. So, excuse me, and I thought we had some options pinning. I'm not sure how this is going to resolve. It's either going to resolve up or it's going to resolve, we could come back down to retest that 115s. I've said for a while, anything above 115, I thought we got the 119, 120. We got it. If this doesn't hold and we come back down, I think we're going to see those 115s and maybe even the 50-day again. It's possible that this does want to correct. If the NASDAQ does, if this falls out of bed, it would drive the NASDAQ down. But we'll have to see how that plays out. Keep in mind this 119, 120 is key. Above there is bullish. Below there is a little iffy to the 115s and maybe even to the 112s. Above here, I should give some targets, right? I think we would want to come up maybe to the up to the real meat here, the 126s, and maybe even fill the gap up here to 130. That could happen. It's really not that far away. And if we get some end of quarter buying, it would be probably where we would go. Amazon is another reason why this is strong. A few people had asked me on the stream here. I had said that this day's range was the key. Above is bullish, below is more bearish. I did say I thought higher. We got higher. This is a little bit of a reversal bar at the top of a range. I would be a little bit cautious. It could easily check back to here, but anything above 619.45 to me is still bullish. If it gets below there, it gets a little bit iffy. Maybe we do want to fill the gap. If you break here, I like put ratios or even just flat out put spreads for play for a gap fill. We'll have to see how that goes. If you're really quick money, You can play short against 630.72, but if this gets taken out to the upside, I think we're just going to keep going. Amazon, I think the Walmart woes, I think all of these box retailers, Macy's, the Targets, Amazon has been the beneficiary. I mean, who the hell wants to go to these crappy stores and deal with their incompetent, crappy staffs when you could just go on Amazon and have it delivered right to your door? I order stuff on Amazon. It's really dangerous. I order way too much stuff on there. You can just go into their mobile app. If you think of something, you're out one night or you're sitting, at home. Oh, I need this. Bang! I don't have to go to 100 sites. I go to Amazon. I find it in 2 seconds, and they deliver it very quickly. So I think that Amazon has a great business model. Sure, it's really expensive based on their earnings, but people here are kind of buying the future. I think we don't have hoverboards or flying cars, but we have Amazon. Okay. Google has fueled a lot of the rally that rallied into the numbers. Again, it sold off because people were taking profits. I think a lot of people were in this sucker with weekly calls. These were all chasers that got paid in Amazon and Google. Google isn't as strong as Amazon. It's not back up above the high. So to me, it's middle of the range. So, it's flip a coin. Your guess is as good as mine. A little bit of a bearish pattern here with an engulfing bar. Maybe it wants to fill the gap. That's sort of what happened here. Look, it held strong for a few days, got weakened. I think this really had kind of wanted to fill the gap, but then you got the Alphabet news here, and it just chopped. And then, of course, we know we had the sell-off, and it filled the gap. So I think eventually they're going to fill the gap here. But, look at this. You're up above these highs. It's hard to be bearish, folks. As long as this is above the 613 area, that's still, even if it were to pull back into this range, it's still pretty bullish in the 700s. I think if this came back down, you might even want to sell some puts, around the gap fill region. Or if you want to play for a down move, play some put ratios, but long here and then short 2 times out of the money there. So that's Google. Google has done it again. It rallied Facebook. Can you believe it? I had guys still trolling me on Facebook, telling me it's going to get cut in half when the minute the Fed raises interest rates. These were all guys who were bearish down here, and I said we were going to 100. I've been bullish. I've been documentedly bullish on Facebook since $20. If you go back then, it got 19. I'm a dummy, right? I got bullish $1 early. Anyway, I want to show you something very powerful in Facebook, and I think this will help many of you. Anyway, before we get there, let's just go through this. This rallied here on Google earnings, and we did it again, and now I'm a little worried that we're pulling back. This could easily pull back to retest the 99.24 and still be majorly bullish. It just is rechecking. It actually would be even healthier if it did. However, you could draw Fibonacci retracements many ways. The big one of the real breakout here of the 86s is down close to the 61.8. Excuse me. The 50% is even up here around these highs here. This kind of breakout around the 90s. That would not even shock me to see it pull back mid-range to take back some of this excess. If you draw it from here, the 50% is roughly kind of around the breakout, around 95. Look where that volume profile picks up in 93s. It's also the 50-day moving average. We know in Facebook, look at this, the 50 was key here. When it broke below, it stalled here. It was resistance, support. And then, we kind of played this game here. The 50 is really key. I like put ratios with the 50 being the low strike. If we do come down, ahead of the number, if there's some panic, that would be great. The options have been so cheaply priced in this. They're still cheap. You can put on protection if you've been long. I don't like that we had this engulfing day that took out, all this sort of excess. I did say this day to book some profits. I think there was actually a spike even up to 106. I said I thought we could get close to 106 on a break here of the 99s. And I'm going to show you something that nobody else has, that I have, that I have this regression line drawn. It's an upward, it's an oxymoronic thing. It's an upward regression line from the big gap. This was sort of when they had the 2 quarters back-to-back that were profitable, and they showed mobile growth. We've been in a major uptrend since then, and anything on the bottom side of it has been a buy. You can see that's too cheap. But once you start getting on the top side of it, it starts getting a little bit expensive. You can see it held here. And up here, we got a little bit above it, but we chopped. And here, look what happened. We were getting back up there again. And I said, let's get a little bit cautious here. Let's take some profits. I also thought it was getting heavily chased, and they haven't even reported their numbers yet, for crying out loud. This is all run on Google. So any pullback here I do think is viable, but I am a little concerned that we will see some pullback. That being said, maybe they do want to, I do think longer term we're going to see this 1.618, the 109.28. That's if you do a Fibonacci from the, I think it was to this low, like if you did one from here to here, and then if you did one here to the flash crash low, that's 116.07. Longer term, I think this stock could even double. As crazy as that sounds, I'm going to be the only one saying this, but they have an amazing model. The stock could double. Longer term bullish, short term cautious. So let's be, we don't like to chase here. This is up multiple days. They haven't even reported their quarter. We know the dollar has been strong. We know that's been a problem for Facebook before. Let it come in a little bit. If you're still in and you want to play longer term, you're bullish, just buy some puts or sell some calls. Let's be a little smart. Twitter. Oh boy, they were crappy on their MAUs. Their earnings, the quality of their earnings was pretty good. I think they're doing okay with selling their ads. The problem is they have a growth multiple and they're not growing their user base. So I think they're making some good changes. They're doing some stuff. None of that was reflected in this quarter. So you filled the gap, and then you've been pulling back here. I said that this 29 to 29.51 was key. We're below there. Really, the key now is the 50. I think we're in an up channel. I think that this could be dead money for a while. There's easier ways. If you want to just nibble a little and stick this away, maybe it works. I'm a little cautious, though, with Twitter as long as we're below this 29.51. So I think you can be long a little bit based against this low. Maybe it wants to retest. But it's a little iffy. Their story isn't that great. We're going to have to see some, if their initiatives actually paying off. I don't think, a lot of people were saying, I think they're going to get a pass this quarter. Why are they getting a pass? They've proved that they've had incompetent management. I don't want to go down that road and explain, but, you have a growth multiple. You've kind of been a dog. There's no free passes here. So They gotta start showing that they're actually doing something. GoPro. Let's talk about the silliness, right? I've hated this company. I hate their management. I hate their products. I hate their style. I hate everything about it. Around here, I started saying that I was getting a little bit thinking for a bounce, that I wanted to play the stock long. Actually, it was this day, me and this guy Brad, who's on another broadcast. He and I guess we pulled the Thelma and Louise. We held hands, and we were just like, keep driving, drive over the cliff. Anyway, it had a bounce. It has sold off. Then this day, I said trim and trail. I had been saying in videos I want to be long ahead of the earnings for a short squeeze, but I don't want to be long into them. And I've been saying that I think that this stock, amazingly, as crazy as this sounds, could be a single-digit stock. We are the lowest we've ever been in GoPro down here. I don't know that I would be shorting first initiating here. I was saying to short this whole way down around the old lows. I kind of started changing my tune. It looked like we might have a rounded bottom. I thought we could maybe rally back up. This would have been an absolute gift. My fingers were crossed for this, that we were going to do some kind of crazy short squeeze and gap up so I could just short the piss out of this thing again. Maybe get even to the 37s, which were the breakdown here. And, Christmas dinner would have been if this gapped up to the 46s here to the gap fill and the 50% fib. I can't even tell you how much I would have shorted this stock. But unfortunately, they muffed their earnings. They're lowering prices. Their product isn't selling. He said something. They took their foot off the accelerator, and I guess they stuck it in there, where. And I think this stock is going to be could go lower. It could even see the channel low. You could see I drew this in a while back, and I guess it took longer than I had expected. It's going to take a little longer. It happens sometimes. Getting direction and timing is not always the easiest. So maybe it wants to drip its way down there. I don't think it's going to be in a straight line, but I am not really that bullish on this stock. Another one that trades with it is this Ambarella, which is a complete piece of garbage. I had said I didn't like it up around the 110s when it broke this area here, and then again at 96s when we broke here. This was an amazing short. It is a complete piece of, I don't know. I don't have as much animus toward. I think the reason I hate GoPro is because they unlock shares back in the. Let me go back to this GoPro. That CEO unlocked shares, I think, up high prematurely before they were supposed. This guy actually did what he should have, what Marissa Mayer should have done with BABA. If you go back when they did that BABA IPO, I said that they were making an amateurish move, that you sell when you can, not when you had to, and she completely showed that she was a amateur and a rookie in that move, and I think that that was a huge mistake for their shareholders, and I don't want to go over Yahoo, but they have paid tremendously for that. But this guy, he did really, I guess, what he was allowed to do. It sucks if you're a shareholder. He unlocked his shares. I don't remember. It was somewhere in here. It was way higher than it is now. And it was prematurely, and I don't like when management does that. And it really rubbed me the wrong way, and I've been bearish on the stock really ever since, with brief respites for bounces. Anyway, Ambarella. This one I don't have as much animosity for, although this was clearly a bubble. We are below these lows here. There is some support maybe in the 48s and maybe the 44s. But I think eventually this, and if it happens before earnings, it would be all the better. Although we are getting a little bummed out stochastically. I would love to see it retest the primary trend. That was really, look where this big consolidation breakout was in the 36.5-ish area. This would have traversed the entire run-up, the entire move. I would be loving life to buy this stock down here, maybe sell some out of the money puts. I think you could play this with put spreads or put ratios ideally, because it's already down a lot. There could be a squeeze in this, but this has suffered tremendously. I'm not a big fan of these stocks. Tesla. So Tesla has come down a lot. I had said I thought it would get up here and retest the this old high. It had a bit of a head and shoulders here. It fell down. This has been some major resistance for a while. We came down, but now look, we're getting back down closer to these lows, and there's a trend line. There's also the flash crash reference low and a gap fill. So the ideal setup would be for this to keep coming down. It's already sold off a lot, and we know this has a big short interest. And Solar City blew up. It's another one of Elon Musk's stocks. I don't want to get into that right now, although maybe I will briefly after this. I'm thinking that we're into some reference area around the 204s. I would probably be inclined to play this long into earnings. If it rallies ahead of time, forget about it. If it continues down or stays muddling weak, I'll probably try and maybe play it a little bit long for the earnings. But again, that's only if it's down to weak. If it rallies ahead of time, then forget about it, right? They say forget about it. Let's do Solar City quickly. I hadn't even planned on touching this one, but it's hard not to. Let's go back 5 years on a weekly. Look where we're coming into here. This is really do or die levels. I do think you could play right or right out against these 28s. If they fail, GTFO, meaning get the F out, because I don't know where it's going to stop. It could be, come down into the teens. It seems like that might actually happen. It's a little, it's as cray-cray as it sounds. These 28s are the key. If you lose it, see ya. Let's end on Priceline, because that was another one I made a pretty good call on. I've been saying for the last couple of weeks. I said that I thought we were in a big channel, actually. I had said this for a while, and look where we are here. This was up on Expedia numbers. I do think you got to be a little bit cautious now on Priceline. You're through these highs. You're at a channel high. It's run up in a straight line. I think it's going to peel back. I could be wrong. Listen, I've been wrong before, but you ran into the numbers. The stock has rallied from basically a little in the 1100s up to the 1400s. I think they are going to maybe want to split the stock finally. Maybe. It would be nice. So, us peons can play in this thing in a little bit more size. Uh, anyhow, it wouldn't shock me to see this come down a little bit. I would be a little cautious here if you're, Mazel tov if you've been long, but we are at the channel top. That's been problematic before. It could pull back a bit. Let's be a little cautious. That's rallied on Expedia, which I've often called the poor man's Priceline. I've said I like this. I actually think, believe it or not, I'm going to give you a little bit of background on Expedia. They are amazing with what they do. I actually use Expedia sometimes when I travel. I think that they advertise and they don't include the tax, so they always come up as being the cheapest. They have a really good mobile app. I think it's actually the best. They have a great website. I think that they are more user-friendly and functional than Priceline. And I am a buyer when this thing once in a while falls out of bed. You can see here it had this big gap down. This was ginormous. It seems like no big deal, but this was huge at the time. Anytime this stock kind of has a protracted down move, like look here, it gapped on earnings, it filled the gap, and then it was sort of just sideways, I would like to sell some puts if we did wind up coming down a bit. It's a little hard to chase up here. There was some selling, but I do think that this is sort of the best of breed. These two stocks are really amazing. Anyhow, that's the end of the weekend video. Be sure to hit the like button if you liked it. Please subscribe to the channel so that you can get notifications when new videos are posted. And let's have a good week, and cheers.